Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo! Party! Da-na-na-na-na-na-na-na-na-na. Woohoo! T minus, gee whiz. Oh, it looks like YouTube's rocking, so that's good. T minus, oh wow, 1, 2, 3, 4 weeks, less than 4 weeks minus a day until TRI Meetup Vancouver 2019. Obviously, I'm a little bit preoccupied with that. It's a big event. This has been sort of my opportunity to give back to the community here, inviting everybody to Vancouver. So my apologies if I'm not posting as much on the site as I have been in the past, but got to get this thing done. And yeah, actually, that's a good point, Kevin. We should probably touch base on that. If anything, maybe why don't we maybe schedule to have like a Vancouver TRI meetup meeting? Just review everybody's on the same page with regard to reservations and stuff. I think the only really big one that we have to worry about right now is the fireworks dinner cruise. So thanks for reminding me. I'll maybe put something together to review all that here shortly. But all things aside, this is our hour to talk a little bit about markets, where we see things going. Are there any opportunities out there? Maybe Chinese electric vehicle stocks? Who knows? I am running solo here this morning. The mayor has been a little bit preoccupied with other projects, so we've given him the week off. And hey, everybody deserves a break, even from TRI every once in a while, just to clear your head, get everything all tickety-boo. And the bear is not scheduled for this call today, so that means you got good old Brian for about an hour. If there's anything in particular you'd actually like me to look at, I'd be more than happy to take the time today, with things being a little bit quieter, to do so. We could take sort of a little jaunt through the market. We talked yesterday specifically and in the sort of daily brief recap about the big move in the currency markets over the weekend. How that was reflected in the yen coming off, the gold coming off, and of course Bitcoin coming off. And I do see a heck of a lot of correlation with these kind of markets. So I'm actually feeling more and more comfortable with this idea that Bitcoin has now become part of the sort of Wall Street vernacular, digital gold, all that kind of talk. And it should probably settle into sort of, intermarket analysis, correlations, all those kind of fun things. So as you can see off of this screen, it's awfully busy. I know, I'm sorry, but we had a funny holiday, sort of semi-holiday session yesterday, and the Americans will be away on Thursday. So this is going to be a weird week anyway. And as we also have sort of talked to you guys about, and those people who have taken the education program understand things like first 2-week study, sector rotation. Let's see. I suppose we can just pull it up here. So, we probably will want to keep an eye on, where's the best way to do this? And we'll go over here, and then we'll go over here, and we'll go U.S. sectors. I don't think you can really glean too much out of just one day. But coming out of the gate, in fact, actually, they make us start at 228, so we don't really know. We don't have enough data here to work with just yet. But interesting to see tech came out of the gate strong there for the past couple days. Utilities weak, financials a little bit stronger. We'll keep an eye on this first 2-week study, see how it does. I suppose Not a bad idea since we have some time here today. Maybe we should just take a quick view at how that last quarter went. January, February, March. So if I go like that, it's one of these buttons. One of these buttons is not like the other. There we go. So April 1st to June 28th, April, May, June. Yeah, that's about right. So we can see, on balance, what did the last quarter produce? Really interesting sort of broad spectrum. And I think I've talked to you guys about this before. I don't know whether the market really has a clear perception of where we are on the cycle. Financials actually outperforming, and of course that's the sort of conversation: is the Fed done raising rates? If they are done raising rates, and that's the end of the rate rising cycle, then we actually should see financials underperform. And Mr. Trump and Mr. Powell are sort of at each other's odds, back and forth, back and forth. Mr. Trump, of course, would like Mr. Powell to stop raising rates and maybe even lower rates. If that's the case, then we should see financials underperform. But the fact that they actually outperform the entire market here leads me to believe that the market believes that the Fed's not done yet. And if that's the case, then that means that we're still sort of sitting right somewhere in this area here on the curve. You see that tech, consumer services, technology, discretionary technology, interesting basic materials did relatively well, in staples, which, is a bit confusing here. So, here is technology, discretionary, consumer staples. So if we're not here, then maybe we're somewhere over here. We'll keep an eye on this through the first 2 weeks of the quarter, see how that report goes, see if it gives us any sort of hints as to what the broader market's thinking. We should probably, while we have the opportunity now, just quickly check in on things like yield curve. Are we positioned for recession as it stands right now? Even though I hear lots and lots of talk in the marketplace about how the yield curve is inverted, this is not an inverted yield curve. And stockcharts.com makes it nice and easy for you. It says normal here. The only part of the curve that's sort of out of whack right now, yes, short rates on the very short term are higher than a good portion of this curve, but the long rates, and that's sort of the whole key of mortgage business and life insurance business for the financial services industry, those long rates are still higher than short-term rates. So we can't call the curve inverted yet. And I'm a little concerned that basically the whole market has just sort of decided that the yield curve is inverted, but it's not. And I was even reading on some of these rags here this morning that leave it to the Europeans to sort of mess this up. No pun intended. He's like, what are you talking about? Don't diss us, you Europeans. But I was a little surprised to see that and I don't know where the hell it was. Maybe it was over here. I was a little surprised to see that people were talking in Europe about the U.S. yield curve and being inverted, but I don't think it is. Of course, I can never find it when I want it. Thomas always has all these links and stuff all preloaded. He's so smart. If you hear people talking about the curve being inverted, consider that with a little bit of a jaundiced eye. I saw economic data coming out recently. It was okay. We were really worried about the Dallas Fed was starting to print things like, actually here it says NB, actually that's China. Their PMIs dipped below that 50 level, which we're sort of, worried about. That's sort of your official flag that we're heading into recession from the manufacturer's perspective. But looking at this data that's came out here, I sort of looked at that, personal income and personal spending. Income actually came in a little bit better than expected. So, the economy likes that. Personal spending came in basically in line. And what I thought was really interesting through the holiday, the ISM manufacturing PMI for the June. Excuse me, I gotta sneeze. There we go. That's what everybody wants to hear. Oh, thanks, guys. ISM number actually came in okay. We had, I think it was the Dallas Fed, or maybe the Dallas region. We had a PMI number come in that was below 50, which was uh-oh. But here you can see ISM manufacturing came in 51.7. People are watching the services sector, and everybody who's taken a level 1 program should understand this. The baby boomers are now into retirement. We used to, in fact, in previous courses, years ago, we used to say, okay, think of growth industries that are going to be servicing these baby boomers in their retirement. And of course, that's all about services. So I have a funny feeling that this services non-manufacturing PMI is going to carry a bit of weight in the market, and that's out tomorrow. So let's all keep an eye on that. And you can actually see manufacturing, we're flirting with disaster right at that 50 level. You can see the non-manufacturing, the services side of the PMI sitting pretty comfortably above this 50 level. So this, I think, is going to be a pretty important tell. And I think, if we just mouse over this, you can sort of see the trend. You can see the double top, right? We were up there in the 60s. And, the cool part about M's and W's that you're going to learn the rest of your life, you're going to see this stuff everywhere for the rest of your life. You're going to see M's and W's in the sidewalk, in the cracks in the sidewalk when you walk down the street. But anyway, hopefully you can see the very clear M, the sort of trend in non-manufacturing PMI number here. But as long as we stay above 50, that does technically mean that the economy is expanding. As I had said just a moment ago, it'd be really interesting to get the gauge on that. And Jamie was going to come in and give us a presentation, but unfortunately, the Italian train system totally derailed him. And so he's stuck in the middle of some Italian backcountry village or something, and he wasn't able to make it for his regular scheduled broadcast. So he said he was going to try and come on mid-July and do a summary of what he sees out of the manufacturing data. And he has that cool little study that he does where he connects PMI and technical events and stuff like that. So we'll keep an eye out for that. But on balance, what I see here is U.S. market durable goods orders took a bit of a punch in the nose last week. Market didn't like that. Remember, we said we had that Dallas Fed meeting, or Dallas Fed, Dallas regional ISM number that came in kind of weak. So a lot of people were humming and hawing about, Fed cutting rates and all that kind of stuff. But then, Friday, personal income and spending come in pretty healthy. So there's no real panic there. Technically, we are still expanding here on the manufacturing sector, although hopefully everybody can see the M's there. So we're flirting with disaster there. As I said, this data point coming out tomorrow is probably going to be pretty important for the market. And then, of course, like we said, we have basically the Americans on holiday on Thursday, which means that Friday is probably going to be kind of a wonky day anyway. Looking at the market itself, I see a lot of humming and hawing. Remember, we had that big jump that came out of the G20 event. If anything, this is a really good analogy of you can have the most beautiful technical setup, but a fundamental driver can come along, like Mr. Trump and Mr. Xi saying, okay, well, maybe we'll make peace. Who knows if that even plays out? but these big fundamental news drivers can often move markets dramatically. And you remember, Nebraska and Hoag's old rule: you better square up your positions before big weekly API numbers and stuff like that. And I got a funny feeling that's sort of what's happened with the market here. Because what I noticed is, you can see the stock market. We had these algo technical signals working, and then heading into that G20 event, I'm getting the feeling that this was a trap. We'll see what happens. Only time will tell. But I noticed that stocks are kind of languishing here. And as I just showed you a moment ago, I'm not seeing a heck of a lot of follow through on that big burst that we had yesterday, and things like all sort of humming high. You can see that, U.S.-China Cold War threatens global recession and financial crisis. Geez, I think you've heard Brian talking about this for, a better part of a year and a half now. Trade wars never end well. They always end ugly. And so we're probably now going to see how this plays out over the next, Alicia here says, geez, does he say Brian says only time will tell a lot? The interesting thing is that, a lot of the times that's the only thing you really can say is, okay, well, we'll see what the market does here. I suppose I can come up with another expression. I used to have an old client of mine. In fact, that actually, the Willie indicator, I don't know whether you are familiar. Yeah, Alicia, you've done the level one. So Willie was actually an old client of mine who used to, the guy actually used to it used to drive me crazy. He was a client of mine, fairly wealthy individual. And he would get like a hot stock tip, and he would start buying, and then the stock would go up, and he'd keep buying, and he'd buy more, and he'd keep buying and keep buying. And he'd be up like huge numbers on this position. And it'd be like, okay, Captain, is it time to sell? Is it time to get out? No, buy more, buy more. And he'd always say this. And I think I tell you in the level one course, this one line used to always drive me crazy. He used to always say, you can never have too much of a good thing, right? Well, definitely over. Oh, God, one bulletin board stock, man. I think he put like about 30 or 40 grand into the damn thing, and he was up huge numbers, hundreds of thousands of dollars, and then he just let it all slip through his fingers. I named that Willie indicator after him, being stupid, right? Don't buy when the damn market's overbought, but oh well. Anyway, that was one of his expressions. He was an old steamboat captain on the Fraser River, and he had a very colorful speech, if you will. And that's one of the things he used to always say was, only time will tell. So, and keep in mind, most of the expressions and stuff that I use are nothing more than gleaned from old timers that I used to work with in the marketplace. I like that expression, and I used what they said. And it's interesting, like I actually see other people also doing the same thing. And some people are like, don't you get frustrated or angry that they're using your expressions? I'm like, nah, you know what? It's the universe. It is what it is. I think it's important, though, when people go out into the world that, if I use an expression or a name to describe something, don't use that same name to describe something else, because that's just going to confuse the public. So anytime I hear somebody make reference to like risk management tools and strategies as trade setups, that kind of bugs me, because I don't want people to be confused. So anyway, back to our story here. Didn't really see too much. I mean, there's a lot of sort of social stuff going on, Nike and Mr. Kaepernick and stuff like that. They're at odds with governments about waving flags and different types of flags that they can use in the United States. And, lots of this sort of politically correct stuff about this Betsy Ross flag. I suppose, if society is sort of distracted with this kind of talk, it'll sort of take away from, stock market kind of talk. I am worried that we're going to have a big melt up in the stock market here, and Mr. Trump, pretty much the way that he has to, if I understand correctly, if he does not win this next election, he could be open up to lots of lawsuits and maybe even criminal suits. So I think he's got quite a bit on the line to make sure that he wins this next election. So he's going to do everything he possibly can to get this stock market rocking and rolling. And just worried that he's going to try and strong arm the Fed here. But we'll see what happens. Only time will tell. So didn't really see anything dramatically new about what's going on in the market. Lots of rhetoric about U.S.-China trade war stuff. And if that's sort of back on the front burner, then it makes sense why the stock market's just sort of stalling here. One thing that did catch my attention today was that crude came off pretty dramatically here. And I really couldn't find any sort of fundamental drivers. Keep in mind, today's Tuesday. API numbers should come out tomorrow. And I'm just wondering whether maybe this rally was manufactured a little bit too far, too fast, maybe. I did go and buy a oil stock here recently. And, I mean, you're never going to be right 100% of the time. I can absolutely guarantee you that. This is not little old lady just buy and hold. This is trading. So, if this thing does start to break down, I'll be more than happy just to say I was wrong and get out. As it's sitting right now, this SRC, I like this trade. I like the location. But if anything, this is a perfect sort of commentary, strong opinions loosely held. So I'll take my shot down here. I had the bull divs. I had Willie Stupid. Had W's come in reload zones. 50% levels are all the way up here. Cheeky little gaps to get filled in up top. But you just never know what the hell's going to happen. I mean, right? Alicia, what do I say here? Insert line here. Only time will something. I've taken my shot, and we'll see how it goes. And if we break these lows, as I said, I'm willing to take about 20% risk on a trade if I can realistically think about getting double my money kind of idea, just live with the results. On the flip side, and of course that's sort of the way the market always works. The market always gives you some winners, some losers. At the end of the day, it's almost like a zero-sum game, but we picked up a little bit of this NIO yesterday, or I did from my own account. And a little bit quick, I'm front-running this W pattern here, but I really liked the fact that, well, I guess first off, scroll out, just, 50% rules just off of clotheslines, right? This is a clothesline 50% rule. I suppose if we go off of the entire range, we're going up there. $6.50. Here's a really good example of relative risk to relative reward. If I'm right, then rock and roll. That's like 300% return on my money. I saw this fractal come in here, really pretty little fractal. And it just so happened to be right at like a mountain man level right there. So we were just waffling here yesterday, and I noticed when I looked down at the price momentum oscillators, nice W's coming in on the oscillators. Hopefully you guys can see that. Oh, can't move that around, sorry. W and RSI. Not really a W in Willie, but bigger W and RSI breaking out here today. But W and RSI, in fact, here, why don't we even just like that? Whoops. W and OBV, and all you Davo aficionados. Hopefully you can see cute little W's in OBV, cute little W's in RSI. That gets guys like me really interested. Nice little fractal to frame my trade in a reload zone, and away we go. So cute little trade. We'll see how that goes. I'll on this guy, I think I'm going to risk to a break of these lows. If we lose this level here to 50, nice big fat round number. Oh, beg your pardon, 235. Then I'll walk away. So I picked it up at like 262, if I'm not mistaken. So I'm going to risk about 10-15% on this. And like I said, I mean, if the trade idea works, then woohoo! Nice little win there. I also noticed too, looking at a lot of the sort of alternative fuel stocks. I guess I don't have it on here, but I did up a chart and compared them with things like. Oh man, this Brave browser is a bit of a challenge. I might lose a bunch of information that I had to put on here. But I did up a couple of the, like it appears to me that a couple of the alternative fuel stocks, FCEL, I think it is, are starting to catch bids. You can see fuel cell, can't really see it on the charts here too well. How do we do that? Oh, I guess we can just go fine. I don't know whether you can see that or not, but oh fudge. No, it's not gonna work. Darn. You're just not cooperating today. I'm wasting everybody's time. Sorry, guys. FCEL. I mean, what do you think? Does anybody ever? What's the expression that we should probably use for this? That's excellent, Reza. Very good, Reza. Volume speaks volume. So a lot of these fuel cell stocks, alternative fuel stocks, are starting to catch a bid here. And it's a little bit tough to see this W, but nonetheless, hopefully you can see down, up, down, breakout. Coming in on heavy volume here. And then I also noticed our little warrants on the blink. They started Wing out here, and they're moving up higher. I haven't really looked at Tesla. I don't know what he's up to these days. V bottom. It might top out here. Tough to say. There are some gaps in here. Not a bad sort of leader in the space. So I'm feeling a little bit more optimistic about the alternative fuel kind of names, but we'll see how that goes. Actually, this is interesting to see. Some of the blockchain stocks are actually perking up here a bit again. This is BITK, Blockchain K2 Corp in Canada. I think, yeah, this is a Canadian stock. And I think I had shown you guys. We're getting closer to my profit objective. I mean, I'm in the money now, so I'm feeling better. But not a bad looking move up top here. Come up and fill these gaps, test all these highs, and I'll be a happy camper. So we'll see how that goes. As well, Overstock is trying to sort of stabilize after its face rip move up here. So that's encouraging. We should probably also keep an eye on things like Novogratz stock. What the hell's that damn thing? GLXY. Woo, he's getting hit. Interesting. Okay, so Novogratz stock trying to one, two. Actually, that might be a lower low. Let's see. Yeah, it looks like it is. So 1, 2, maybe 3. Nice little inside bar here. I might consider picking up some of this because that is technically a big bot that's working there. So I'm going to keep an eye on that, but it's interesting how he's come off. I wonder if there's news around that. So stock market wise, why am I mentioning all this? It feels as though crypto itself, we got ridiculously overextended there. What time is it? Oh, geez, it's already 9:30. All right, well, that's not a bad segue. So it felt like we got a little bit ridiculously overextended there, and I think that makes sense. Mountain Man, we blew right through 38.2s, blew through 50% rules, stalled out at Mountain Man, and had to come back down to earth. And what I thought was really interesting this morning was, our talk about Ray Barbecue. Notice how we just basically pulled back into that 38.2, and the market just simply ran out of sellers. So I think that's an interesting tell. As well, too, I've been following this high to low trend line, and it's been respected on many occasions here over the past year or so. And notice that that's basically where we're sitting. So it almost feels like this trend line here is almost like the oscillator for the market right now. And also, too, I think this makes sense as well. Notice that the low there was 96.14. So basically, this was just nothing more than the market coming back and just kissing that big, fat, round number from the other side. Does that make sense? Hope so. Any feedback? Nothing? Zero? Zilch? All right. So, what's your sort of expectations here? I think I've said this a few times recently. I don't know whether I'm really feeling too keen about like actually aggressively shorting Bitcoin here. I think that, Mr. Barbecue, basically what we teach in the education program is we can't even really decide whether this is a bull or a bear until this 38.2 level has been resolved. And it can go a couple different ways. We could end up Wing out here and heading higher. See that happen lots of times. And of course, we get three lows. Maybe this is 1, 2, 3, and then we bought our way up to new highs. Aren't going to do any old damn thing at once. Conversely, we might have to stall out here and roll over. Point here is that I think we had a pretty important reference point there hit this morning. And now we have to sort of let the dust settle. And you guys, we might find that this actually ends up having playing out the way that this potential fractal played out. Can you see the fractal here? So do we have any current level oneers in the call? Tony, hi Tony. So you guys just did candlestick patterns. Can you see how this bar, and this bar could potentially make a fractal? Does that make sense? So just like this bar, and this bar could have potentially made a fractal. And notice that this bar, they just ran out of sellers here, and it turned around once, zooming up. You could argue that, market, for one reason or another, ran out of sellers here at 38.2. All the pros are like, I'm not going to short a tag of 38.2. What are you? That Ray Barbecue guy's going to come and chop my head off. What are you, crazy? So the point of the matter here is that this now becomes actually our hugely significant reference point going forward. We should probably even, I'll throw this on the chart and we'll make it even a little bit bigger. But in essence, that now becomes sort of our, our line in the sand. And if anything, what we'd like to see as if you're a bull, is you'd like to see the market just sort of park itself here through the week, and then start putting in higher lows and higher highs, and away we go back to the bull side. I mean, you don't know what the hell's going to happen in this world, right? Only time will something. But now we actually have a really important reference point. We should even probably just keep that on the charts. 96.1408. 96.14.08. And we'll put that as a little there. All right. So let's keep an eye on this level going forward because I think that's going to be pretty significant. For the lower time frame players, we had all these. Where's my charts? There we are. We had these short setups sort of working away here. Bearish bots, actually pretty well-defined M top right off of that level. Could you argue that it was only 2 highs to short again here for the bot? Yeah, you could. I mean, I wouldn't debate that with you. And, I mean, I like to have 3 highs because then I have a nice, comfortable wiggle room. But you can clearly see that the M definitely was working its magic here. And we also had, algo signals fire bear on that structural failure level. So like for the lower time frame players, I wouldn't have a problem if you were like, hey, we're heading down. I want to get short. So I'm short and just riding this thing down. For the botters, move stop to scratch, never came back. It came close, but it never came back. Then move stop to trailing. So at this point, when this is hit, and I think this is really important, right, is that we just simply with the bot, move stop to trailing, you just simply, market structure, lower highs and lower lows. We don't really ever want to see a winning trade turn into a losing trade. And in this case, it's interesting how we rallied right back to this most recent structural level here. And now we're actually painting an inside bar through that. So clearly, if we do accept back above here, then, that's actually going to carve out a head and shoulders pattern, which means that we probably like targets. We should probably be thinking there to there. Whoops. Well, yeah, what the hell, we'll go with that. And there to there. So probably a nice little rally right back up into the original bot shorting level. That wouldn't surprise me one bit. So, for those people that are trading this and, maybe had taken these shorts, I do like the idea that if we do actually trip up this level, and what is it? It's 10,661.10 here on Stamp. If we break through that level, then you're probably best just to hop. So just an FYI to the traders out there, be prepared. We might see this market actually rally back smartly here. A little surprised that we didn't, we can even go boobity-boo. Oh, this was the diamond reference, but oh well. Change this now. Boobity-boo and boobity-boo. Little surprised that we didn't complete this AB equals CD. I got a funny feeling that we need to complete this, especially when I look at something like the futures. What the heck was I looking at? Maybe I'll go down to like an hourly. I had on a futures chart here, which I thought was really interesting because here we go. This over here. AB equals CD, boom, 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 boom. And I thought it was interesting off of that panic low to the next key low. We just drew a simple trend line off of that. Notice that AB equals CD lines up actually very well with that level. So I'm feeling like this AB equals CD has to get done, but, strong opinions, loosely held. You don't know what the hell's going to happen in the market. Only time will something. And as you can clearly see, which is interesting, we do have this monstrous hole up top here. So could we easily see the market rally right back up into these levels here to fill in that gap? Sure, absolutely. And you guys got drinking games and you guys haven't been on the site. Daniel probably remembers this. We used to when Trump was doing his presidential run, we used to have drinking games out of how many times would you say China in your call? We used to go, China, 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 don't get China. And everybody in the lounge would be like, oh, God. I don't even know if half those guys are even still on the site anymore. That's unfortunately what ends up happening with bear markets, like in altcoins and crypto and stuff like that is, a lot of people that were super excited on the upside, guaranteed to make money, buying them Lambos, all that kind of stuff. As soon as we go into bear, a lot of those people disappear. So we'll see how it goes. But anyway, the point that I'm trying to make here is you can kind of see on this CME contract that head and shoulders pattern that they're trying to carve out here. Keep in mind, this is a delayed chart. And if that does resolve, that probably takes us right into that gap level. If I go like that, maybe back down here and then up, right, kind of thing. Our target should be the distance from the head to the neckline up, and that looks like just about exactly right into that gap. So don't be shocked, right? The market will do any old darn thing it wants. Don't be shocked if we actually do consolidate here and work our way higher. Having said that, right, I do think that these shorts have not been busted out yet. So, whoops, where the hell are we? So, if anything, this is such a great analogy of sort of a trader's life. Riz is driving his truck across North America, just waiting for this to play itself out. Right? You don't know what's going to happen, right? If you did take these shorts, then you're sitting there short. You've got your stop working here. You can see how the market came up, and then backed off. And half of the problem with a trader's life is that, your emotions are going to start screwing with your head here. And you might go, oh, you know what, that's going to get taken out. I don't want to see the profit disappear, and you end up just blowing it out here. And then like 6 hours later, you see the damn market's worked its way lower, and you're like, oh, man, those sons of guns, right? So that does happen a lot in trading. So really good sort of exercise in patience and discipline. Either way, those shorts that we were talking about recently, if we do break these levels, I think they're probably best served just hopping off. Okay, so that's sort of the Bitcoin conversation. I haven't really talked too much about Ethereum lately. It is interesting to see, like if we look at the daily charts, this is, it's starting to look problematic again. You can see the big honk and divergence that could definitely come into play here. If we start losing these levels in earnest and heading back down here, then that will tell me that this thing is done. I also noticed too, and I've been sort of seeing this repeatedly over time, that you'll get like a push into stupid by Willie, then you'll get a quick pullback, then you'll get a jump up, and then a very quick tight little top where Willie went stupid again. In this case, we hit 0.2099, so not quite stupid, but at the same time, too, I think we got to respect the fact that that's a pretty big, nasty M that just came in there on OBV. I don't know whether we have it doesn't look like we have volume divs working, but you can definitely see that the bears have definitely woken up here, right? This was 126 million, and this number here was 132 million. So we have a situation here where the red bars are accelerating. They're getting higher. The bears are waking up. And the bulls did not make new highs here, and that could potentially mean that the bulls are falling asleep. Hasn't happened yet. The bulls have not officially fallen asleep just yet, but considering how far we've come here, 38.2 still haven't been tagged here yet. If anything, you know what? This is a really, really good example of what I like to call a moving average sandwich, where 30 SMA is acting as support, 13 EMA now is acting as resistance, and you can see how the market's caught in this moving average sandwich. So my hunch is that there's still probably going to be a bit of play here. This low was 285.30. This low here, 283.99. That technically is a lower high and lower low. I think, just on balance, we got to be thinking AB, CD, right down into this area. Interesting too how that's basically, it's nothing more than just a 50% retracement. I mean, we're not talking about going to zero. This very normal technical level. And actually, Colleen and Alicia, good example here. Can you see how we tried to accept above value? And the market said, no, I don't think so. And we tried again to try and accept above value here, and I don't think so. So the question now with the lower highs and lower lows is, have we now accepted back into value? And if so, where do we go 80% of the time? Notice that AB equals CD is basically going to take us right down to value low. Isn't that cool? Swear, man, if you guys learned anything from the level 2 course, take this to heart. It's sick. It's not called the 80% rule because it doesn't happen. So with that said, starting to get anecdotal evidence that maybe our rallies and seasonal, Litecoin pumps and all that into halvenings they're starting to show some signs of exhaustion. And maybe we might even be sort of big head and shoulders kind of thing. That wouldn't surprise me one bit. So that's sort of what I'm going to be thinking about for the next month or so. And really that kind of makes sense. This summer period isn't the time of year for this stuff to crap out. That's usually into like October, November, December. So if we took the next, few months here to carve out wide tops here, and really we're just sort of parked in a range between about 200 and change to the downside up to 300, high 300s on the upside, and we just sort of play around within this neighborhood for the next couple months, that really wouldn't surprise me one bit. If we sort of drill down, for all the traders on the site and look at things like lower time frames, I was, encouraged, kind of thinking, maybe we've, sold off enough for the time being. Interesting how we came so close to this bought target. That's just insane, eh? But good example where, maybe you had your order working at that level. We didn't hit it. You were trailing your stops because move stop to trailing on the bot level was hit and you got blown out here. Hindsight 2020. I think that wasn't such a bad idea. But I think that this bot is basically done now. Let's get rid of all this stuff. So what do we sort of see here? That head and shoulders would be sort of, shoulder, neckline, head, neckline, shoulder, whatever. I think for the time being, we could probably make the argument, what is a reload zone off of this range? We'll go like that, and gee whiz, here we are. Who's this guy? Anybody who's been watching sort of the public YouTube videos and stuff like this, I've been having lots of fun making reference to Mountain Man recently. So hopefully you all look at this and go, oh, wow, that's pretty cliche. So I don't think there's really anything, startling out of the ordinary here. The only problem is just a Mountain Man level tag into itself enough to justify taking a trade? Yeah, it's debatable. Notice we did have this low. They came down and just probed against it here. And keep in mind, this is also OKCoin too. So does OKCoin play a little bit of games? We might look at it on things like, and I don't know whether this stamp chart's going to work here or not. Yeah, I don't know what's going on here with my charts. Something screwy is going on here. Remember the other day, they just were not loading. So this is a problem from Brian. Yeah, I don't know what the hell's going on there, man. What's going on, man? I don't get it, man. Why are you doing this to me, man? All right. That's that one. Where the hell should we do this? Well, I guess we'll just do up a new chart. So if we look at ETH, where do we want to look at ETH? I'm having same issues, Brian. Okay, so maybe it's just not me. It's TradingView. Where's a fun place to look at ETH so we can actually look at some half decent data? Phoenix? Do we want to play over on Phoenix these days? Coinbase? Coinbase? All right, Jonas wants Coinbase. All right, so big picture. I mean, the good part about this is basically they've taken all the fluff out of this market. There is, kind of like with our Bitcoin, there is that potential fractal sort of conversation. So this most recent low for now is going to be a pretty important level. If we look at the daily chart, there is that probe to new lows, thinking AB equals CD. But, they don't have to do anything they don't want to. If we think reload zones, like we said, that was a mountain man level there. Doink, 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 doink. I don't know whether, I could definitely see Brandon, take this trade here, and then on this counter trend rally, he probably would have let a bunch go, put his stop to scratch, and I think he would have been stopped out here today on the remaining. So just an FYI there. And, of course, because this has made new lows, right, we don't have any W's or anything here just yet. If we go down to, the hourly, there is that that test of that low. There is Mountain Man. So even on something like Coinbase, they did go through the lows. And if anything, this is a bit cheeky. So typical, and I suppose in crypto, we're going to have to sort of get used to this now. But you can see how they tested this low. Okay, we'll go after the stops. Then they put in a little bit of a bottom. Then they go, okay, so I bet there's a whole bunch of crypto kids who all loaded up on this fractal here, this doji. We got them to go long. Okay, let's go and just screw them over a little bit and run these lows, see if we can get any stop runs. And if anything, this is probably also, an interesting tell for volume profile people. In that if this was done on single ticks, then you probably know that it was a trap. Let's go like that, and then we'll go like that. Right. Yeah, so you can see down at these levels, not a lot of new selling interest whatsoever there. We got maybe like a 15-minute chart. Let's see what we got. It wasn't single ticks, but actually, maybe that node right there we might call single ticks. That was that right there. But that to me looks like a classic stop run. I suppose you could argue on this dump to new lows. You can see momentum oscillators did not make new lows. Cute little W's. Not quite a W there. So this looks very messy to me. Not really anything that I could really wrap my head around for a trade. Kind of just got to leave that alone, I think, for a guy like me. You might be different. So Ethereum-wise, yeah. I can understand that we're starting to see sort of bullish divs coming into the market here, suggesting that maybe the sell-off is a little overdone. Cute little W now has come in here on OKCoin. Interesting how those cash markets did flush those lows, but the forwards markets didn't. Well, that's interesting tell. And actually, that reminds me, I wanted to show you guys this. This actually caught my attention this morning. in that the forwards markets are trying to turn here. You can see Bitcoin in particular, it's got a cute little W working. You can see there's that Ethereum forward. So actually interesting tell here. So the cash markets on things like Ethereum did do a push to new lows, little FUs, but the forwards didn't. And the forwards are actually trying to W out here. So this is a little bit more anecdotal evidence that, you know, maybe the selling pressure is has abated. As well, too, you know, Alex, he's super jazzed about watching these Phoenix Premium. So we're back up into areas. Remember, we said that when this thing starts getting deeply discounted, that's actually a really, really good sign of a top. But you can see, you know, lots of wranglings around that sort of wild price action event there a day or two. But we've, you know, put in W's, higher highs, higher lows. So Phoenix is also giving us a little bit of anecdotal evidence that it's feeling a little happier. So it's interesting that the internals here are actually trying to turn back up. So that's sort of my spiel on the old corn right now. I mean, we were sort of face ripping down. Everything was falling apart. You know, buyer beware, caveat emptor, all that kind of stuff. It looks like a lot of that sort of down has been priced in. As I had said earlier, there are technically short setups still working, but they could very easily get stopped out here. Actually, this 4-hour chart's kind of cool too. In that, and this is probably the biggest tell here, I think, for me, is notice good old MACD histogram. This is a situation where you have this bigger, wider divergence. Actually, a really, really good example. Level oneers. Tony, you said you're in level one, right? You'll be doing this in a couple weeks, but I think, Tony, save this chart for your, I'll post it in the lounge. Save this chart for your MACD module on momentum divergences, because I think that's actually pretty good data there to use. Hopefully everybody can see, right? We made a scream down low, rallied back, M'd out in price. The histogram actually put in a little bit of a W, but then started to back off. Started to make lower highs and lower lows. Notice we made 218.73 to 34. All right, so we made a lower low here. So that's sort of what market's in convergence. But notice we dumped on this candle here to new lows, but MACD histogram did not go to new lows. We've, you know, this rally back here, right, over this past 8 hours, pretty smart rally. And I think on OKCoin, actually, yeah, on OKCoin, this stop level has been busted, right there. So ironically enough, if I had taken those setups on OKCoin, I would have said, oh, I'm gone, done. But the point here is that MACD confirmed this cute little divergence on this candle right here on the big bust out. And now we might even be confirming this double divergence, right, on this candle right here. And, you know, like we looked at the cash market and stuff like that. I think you could make the argument that we're sort of humming and hawing whether we want to crap out here. Also, too, you know, I hate to beat a dead horse, but Colleen and Alicia, man, it's good having them here because that means every single week they do a new topic, and then, oh boy, you know, you hear it 20 times. But can you see, guys? I mean, this is gold, man. Can you see how the market tried to accept above value here? Came up and then, nah, I don't think so. Can you see that? Great example of the market asking whether it wants to accept above value. In this case, nah, I don't think so. And so then we have to ask, okay, well, if we are going back into value 80% of the time, where should we go? Thank you, Jonas. And notice there is the bottom of value, right? I mean, it's guys, like seriously, like floor traders on the CME, they literally made a living out of this 80% rule. I mean, this stuff is good. It's gold, right? It's not like I made this up. This is John Hoagland's bread and butter. Everybody can go to Top Step and listen to John every single day. So here's just yet another good example of Hoag's 80% play. So that's been done, right? Any guys who were 80% players, they're taking profits down here. And then all of a sudden we get these divs all starting to come in here on momentum. It sounds to me like, just looking at this, I'm getting the impression that maybe this down move is maybe almost done. Which is good. You know, I think we could use some back and forth in this space. Should never be just one directional. And then, you know, to sort of finish this, because we are at the top of the hour, let's just go back and put that into context of the bigger picture. You know, if we look at OKCoin, probably the same thing as that cash market. Yep. I mean, it's shocking how cliche this is. Does it make sense, everybody? You see 38.2, good old Ray Barbecue. Why did the market sort of decide it was done on the downside? In the short term, well, we were slammed right into good old Ray's level, and Ray said, no, I don't think so. And, you know, clearly now this low here is going to be a very, very important level going forward. And my hunch is, for whatever it's worth, you're probably going to see 13 EMA sort of work its way up. The market sort of gyrate along here, and it'll either act as support against that. Like I said earlier, we could, you know, here's the kick in the pants, is the market will do any old thing it wants. And we might, you just don't know, but we might be setting up for the next leg higher. You just don't know in this game. And anybody who tells you that they do know, they're full of horse crap as far as I'm concerned. Or we roll over and we lose 38.2s, lose that 13 EMA, and then probably our next logical stop on this market would be a test of that reload zone, which also makes sense too. Good old Mountain Man against that key low. And probably at that point, things like 30 SMA are probably going to start catching up. There's the 30 SMA right now. So for the time being, I think the message for today is just simply, we hit 38.2. We Ray Barbecue level. We started to print things like divergences off of the lower time frame charts. And, you know, in fact, actually, I don't know, we haven't done it too much recently, but we used to always religiously say, if you're a bear, and, you know, you can be a bear, you can be a bull, no big deal. But if you're a bear and you see a bullish divergence, in this case, potential double divergence, come into the market, what should the bears do? Why don't we leave off on that note? No, not necessarily. Yeah, I mean, yeah, if you had positions on, right, move stop to trailing, all that. But Kevin, you used to always say this. Do you remember this line? Yeah, Kevin's probably not even listening. Anyway, we used to always say that, you know, in the face, if you can be a bear, and that's fine. If you think this Mountain Man level off the higher time frames was it, and we're done, we're going to do that you know, things like Gardley patterns and head back down to the bottom. There's nothing wrong with that. But if you see a bullish divergence and you are a bear come into the market, you got to cool your jets. Just as simple as that. Got to cool your jets. Okay, the only other thing that I'm going to mention, and of course it's lots of fun, but it is such a typical anecdote of this crypto experience, is Trex. You know, I'd asked Thomas to post that link about Trex delistings, and Trex is at it again. So, this is sort of their latest shit list that they're just crapping on. If you can move your coins to other exchanges, I would highly suggest you do so. Some of these names are only on Trex, and we're just gonna have to take a punch in the nose on them. If anything, this is exactly why you do not put more than 5% of your money into any name. And I'll even myself, I went and actually picked up a little bit of this music coin recently on its testing of tail lows and all this, and it was starting to W out here, and I just got bitch slapped. I'm not going to sugarcoat it. No fun whatsoever. A lot of people even warned me, Brian, you sure you want to buy that thing? It's only listed on Trex. And I'm like, it's 0.025 BTC, so what? Boom! Merry fucking Christmas. So it will show you that Brian is not bulletproof. He makes lots of mistakes. I think on balance going forward, I'm probably not going to buy any positions that are just listed on Trex. That's just stupid. And a number of these coins are listed on other exchanges, and we already started to move a whole bunch of them. Live Coin, CoinExchange.io, some of these are listed on, and I've gone through the process of moving them. But, full disclosure for the site, I don't want anybody coming back to me saying, Brian, you never showed us that you get your ass kicked by these altcoin Trex nonsense. I've repeatedly been an open book about this stupid Trex delisting nonsense, and it's just yet another round of fuck yous to the crypto community. It sucks. I'm not going to sugarcoat it. It sucks major horse cocks, but it is part of this silly thing called venture capital. It's just the way it goes. And the sad part about it is, Trex actually might just end up blowing themselves up. All of their business goes elsewhere and they go out of business. No guarantees in any of this shit, people. This isn't even exchange listed, right? We're kidding ourselves that we call these places exchanges. There's no regulation here whatsoever. I don't know where the bottom of this silly altcoin market is. I've shown you guys repeatedly. Which one is it? I gotta run here somewhere. This chart. And until I start actually seeing W's coming in here, I'm not really in a big hurry to throw a lot of new money at crypto. I'll work the assets that I have in crypto. We are very, very well diversified. We have 200 or 300 different coins. And I don't think this is the end of the Trex bullshit. So that is sort of the theme of 2019. And as long as this is the theme, I don't see how altcoins can rally in the face of this. If you had money and you were sitting on the sidelines and you were like, you see this, are you going to take a risk in going and buying a shitcoin in here while this is happening? I can't see why that would happen. It sucks because I know that there's a lot of people that are like, hey, I little old lady all last year and stuff, and I'm supposed to be making money and Lambos and stuff. But as I said in the Broiler Chicken show, there's a reason why it's called the little old lady strategy. Very well diversified, very small purchases, don't break 5% rule, and try and, in crypto's case, try and make sure to give yourself some outs. And you can see in a lot of these cases, there are no outs, and these coins will just, probably die on the vine, which is brutal, but welcome to capitalism. Okay, I've gone about 10 minutes over, but, I think I said my piece. We talked a little bit about broader market, Talked a little bit about stock market and commodities markets. We talked a little bit about stocks and stock trades that I'm working right now. Even a little bit about stock crypto proxies. We took a real good look at Bitcoin. Took a little bit of a look at Ethereum here today. And then we finished off with a wonderful conversation about shitcoins. All right. I think we'll leave it at that. Have yourselves a great day, everybody. All the best, and bye for now.